guys, hello and welcome back to Green Pips FX. And on today's video, guys, I'm basically going to be doing a scalp trading session based on how my trading day went. I just want to show you guys how I do trading, the reasoning to why I take trades, and how, and just the way on how I view the market. So particularly, I just started my day with two pairs, this Euro NZD and GBP JPY. But first and foremost, when we're looking at the market, we can just we need to have a high time frame view in accordance to a low time frame view. And when these things are combined together, right, which is what we call multi time frame analysis, it becomes one deadly weapon on understanding what the market does and what it's obviously gonna do. So first and foremost, I just started from the hourly chart, right? So if we take an outside view of the hourly chart, then you can see that we're having a pretty much bullish market in our hands, right? We're having constant formation of higher highs and higher lows, right? So at this point here, we've had this this break of structure here, right, from this low here to form this high here. And what the market is currently doing is simply just a, so let's do this, right? So what the market is currently doing is particularly just a retracement into an area of supply. Sorry, in this case, it's an area of demand, right? Since it's a bullish trend. So price is just retracing into an area of demand, and from that area of demand, price could just accumulate and go bullish from there, right? And of course, we are looking to target these highs as our overall next liquidity run. Now, with that being said, so let's just remove these drawings. There we have it. So now we can go back to the 15-minute chart, which is the intraday chart, right? We need to know what the market is doing intraday before we can go to the 5-minute chart or the 1-minute chart for entries. Now, on the context of the 15-minute chart, which is the intraday chart, right? So we can see that price is now retraced to this area of to this overall area of demand here, and this area has been mitigated. So after that mitigation, what's the next step, right? So we know that after mitigation, price is basically gonna be doing something like this, right? Price is gonna mitigate, and after that mitigation, we'll be waiting to see breaks, right? Breaks of structure, right? Or changes of market character from bullish, I mean formation of consistent lower highs and lower lows, into now a formation of new highs and higher highs and higher lows in that case, right? So we want to see this market go from bearish to bullish, in which we can now look into this bullish market and try to position ourselves in that bullish trend to target the overall highs. That's basically what lies in in our minds. So I'm gonna review this from yesterday's price action, right? So so price came in and mitigated, right? So price had a low, a high, a lower low, right? So we can just turn this one right here as our new lower low, and from there price did what, right? Price came up and broke the structural high to form a new high, and from that formation of a new high, right? So let's put this here with this break here, right? So we just call it a break of structure, a simple BOS. So from that break there, we simply had an area of demand in here, which was obviously refined into the entry time frame, which is the 15-minute chart. I mean, sorry, the 5-minute chart now. So this area here, right, this last sell to buy, this is the area of demand that I was looking for mitigation, right? I was just waiting for price to come back into this area here, mitigate, and once this mitigation was done, then I could now position myself and catch this price to go bullish with it. So this is where my bullish orders were lying. And in the context of periodicity, we can see that this right here, it was like 18, this high here was formed at 1820, and then price began to form this intermediary downtrend, which lasted to about 21 hours, right? So that was completely off session. And I like trading in sessions, right? Because that's when the markets are liquid, that's when the real moves are in play, right? So I just stepped out, just left my alert here, as you can see. So this alert since yesterday until now, Price has not yet touched this, but doesn't forbid us to come and trade this market, right? As long as we understand what it's doing, and um, it is what it is. So from there, price just drizzled around during the night, created this channel here, basically just a bunch of liquidity being created, right? And coming into today's price action, which is this area here. So price came up and then created these highs here. And if we look at the time, this was like 10 p.m. in the morning, right? So this is London open. And with London opening, price comes up and takes this Asian high, which is a simple liquidation. And after that liquidation, so this is the session open move that takes liquidity. And then price does what? Price comes down and then breaks the structural low here. So let's name that as our breakout structure. So this is when we start now concentrating and focusing on the market, right? So price has done liquidation of this high here by this high here, which is simply an endorsement for dumb traders who actually thought that this market was going to buy. And people just most of retail and dumb smart money traders, right, they could just look at these areas here for buys and buys and buys, and then in the end price just takes them out, which it happens over and over again every single day. And after that low was broken, so we now know that this market tried to push bullish, failed, and then came in to break bearish. What's that? That's an indication of a very bearish market. Okay, so if this market is bearish, then what are we to do, right? We're supposed to look for an area of supply, which potentially mitigation is going to be needed. And after that mitigation, then we can position ourselves and then to join smart money and big players to take this price bearish. So the area that I was mostly focused on at this point in time here was this area here, this area here, which carries the last buy to sell. And it is what it is. Price came up, just mitigated this overall imbalance here and never got to my my point of interest. It is what it is. And from there, what does price do, right? So price of course price drizzles around, creating this sell side liquidity here, right? I can see the sell side liquidity here being formed. So if price is creating sell side liquidity, then it's going to be taken over time. So price comes in, creates this high here, comes down, fails to break this low, comes up, creates another high here, and then breaks off in light speed. So we now know that we're in a context of a pretty much this high here to this low here. And what we're going to do is look for that area that requires mitigation, which is an area of supply that is an overall last buy before the sell, which I was pretty much looking at this low man in here. So price came down. So we can just, I think we could just replay this from there, right? So price comes down, forms this low, and then begins to come back into our point of interest, right? So this is my this is where my entry lied, and I was just looking to protect myself just above this low wick here, because we know that we have 2 level candles in here with wicks. There's probably an area of supply in here that was mitigated by this wick here. So if there was anything still here to be mitigated, I just wanted to allow some sort of absorption, right? If price wanted to go just a little bit above this high here and take liquidity or mitigate a left out S&D zone in here, it is that happens, and it catches a lot of people, but you just have to apply countermeasures like those. So I had this trade. It was actually a 1 to 4 RR trade, but of course I knew that this here is just my first area of partials, right? So this is my first area of partials and potentially break even if I don't see any internal breaks in here. But of course my my overall take profit target was this area here, my unmitigated area of supply, right, of demand in this case, sorry, this area here, right, down there. Boom. So this is where my overall take profit targets were placed, right, to make it a 1 to 7 RR trade with a 7.2 pip stop loss and a 57 pip take profit target. So there it goes. We can now just I don't know, let's reduce the speed a little bit to 3, right? So price comes in, taps our S&D zone, and then it leaves us this perfect confirmation. Only wicks raising above this, which like I said before, just allowing for potential absorption and mitigation of whatever imbalances are left above that, and etc. So there we have it. So price comes in, starts playing around, and then there it goes. There it goes. So with this break here, 80% of this overall trade was taken, and this was placed at break even, just to to allow that 20% to continue running to this area here. And after that, so I had my break even set in place, because I know that if price wanted to go bearish from there, it could either come mitigate this area here or this area here and then go below. But so this is what happened, right? So after this break of structure here with this low and this high, I was pretty much looking at this area here, because it was the tiniest area that could allow me to have a good RR trade, rather than this whole thing here. Because if I was to take a trade in here, I would have to place my trade at this wick here, and my stop loss at this overall wick in here, right? It's too big of a stop loss. It's not worth the risk. I don't like big stop losses like this, especially when I'm scalping. If I was looking to day trade it, then no problem. But if I'm scalping it throughout the session, then I like them tiny, right? I like them tiny. So I was looking, if price was to get here and give me that entry, it's fantastic. If it takes me out, then it's totally worth the risk. But for this area here to here, right, and then my take profit target is here and here, right? This is like a 1-to-1 or 2 RR trade. I don't do this. So it is what it is. That's just based on my principles of trading. So from there, I was just positioned myself here, just set an alert there. If price was to reach here, it's fantastic. If price was to come within this area here and then fall off, then it is what it is. Still, this 20% left in this trade could still pay me off. So I wasn't worried about that. So from there, let's just play price out and see what happens. So price comes deep, boom, mitigates this area here. I had my entry opened in here with a 5 pip stop loss, with a an initial take profit target of about 43 pips, right, to make it a 1-to-8 RR trade, and then my second take profit target at 51 pips to make it a 1-to-10 RR trade. So these are the trades that I like to take, right? So from there, we can now just add the speed to maximum and play price out. So price does what it does best. So my first take profit target, so this is now live price action. The replay tool is now closed, right? We're at live price action, and this is where price is at the moment. So this area here, my partial area, 80% of this trade has been taken off, and I'm just looking to hold 20% towards this area here, because I believe that price is to come into this area of demand in here. And after mitigation of this area in demand, I can now start to look for buy opportunities in here, right? If I'm to see something like this, then I mean this break here and then this retest here, probably into an area of demand, I would like to position myself in these buys here, to funnel up these buys and target these this high here, and then this the overall highs up there, right? I don't know why. I think it's just my internet lagging. So with that being said, guys, I hope you enjoyed the video, and if you did, then don't forget to like, subscribe if you haven't, turn that bell button on for notifications, and until the next one, guys, stay safe, have a nice trading week, and peace out.